Okay, so December 17th today, going over my trading journals, making sure I review my errors and my wins and see how I can take it again next week. You get me? Alright, so let's see what we have here. First trade, we have this minor order block formed, okay. Identified that. Then we have this kind of impulsive break also below this area of interest that I marked out here. So order block, break, came down to the key level, and this is where I entered. It's like it did a minor break of the key level, but this still didn't even leave a wick or anything. And then pretty much within two candles, I got stopped out. So this entry was rushed below the key level. Should have waited at least for this pullback to happen, then taken the entry. That would have been smarter to do, or entered at this impulsive break from the order block. As I'm starting to realize that that's kind of the setup I like better than these impulse entries. The impulse entries can be a bit like, I prefer to just wait for the confirms now. Yeah, like I'm saying here, wait for an order block to form at the key level or break and retest of some kind. So what would have been good if I saw this break like kind of impulsively, not just tiny ass break, and then do a retest, like a proper retest, or maybe break and then an order block formed, then taking the sells. That would have been better. But yeah, this was just a bit hasty. I did my full risk in the first position, so got stopped out for the day, and then I stopped trading at the end. This is here just me marking out how I could have taken the trade instead, playing it from the minor order block. So that's what I pretty much just described. We ranging up here, seeing that my buyers will sell, so probably wait until it. I mean, we have two tests here. Wait until it failed to break again. Take my entry somewhere like at that candle, stops above, and then just kind of hold it. See what it can do. Or again, when I saw this candle showing some exhaustion here, price showing a little bit of exhaustion here, and then we broke like that, failing to go test up these previous highs, which we had tested up 3 times already. Then I could have entered right there, and spread would have probably put me right there anyway, and then my full trade would have been right here because I would have been risking like 10 to 15 pips, I believe, and this is like 45 pips. So yeah, nice, would have been a nice risk reward ratio. So that is a trade. That is the setup I'm gonna be looking. That's one of the setups that I've identified that's really clean in my opinion. This here I'm just realizing too. I've seen this setup on gold now twice. I've seen this setup on gold twice now. I saw it this day and I saw it yesterday, but I'll get to that in a second. We'll identify that in a second, but anyway. Let me put that here and then let me circle that so I don't confuse what I'm ticking. I've seen this type of setup multiple occasions now, even took a trade like this recently. Yeah, I'm talking about this order block setup here. Yeah, it was a smaller order, and here's the trade I took recently. This was one from last week. I actually just went back over. See that little order block form, and then we kind of form in a little downtrend failure to test those highs. Same thing we're doing up here. Little order block form, and then at the end right there, we just kind of, even for the last 3 tests to the top, we kind of just been making these lower highs. So additional fail to break, and then boom, it did a nice drop. Same thing over here. You can see from up there, boom, boom, boom. And clearly, because I have this bearish structure marked out, there was other areas where it tapped this structure. You can see, boom, tap, fail to break, take the sell, another tap, fail to break. You can keep holding because it did not break, and then boom, exit or secure half somewhere, and then exit. Missed planned entries to study. So these were So where are the trades I actually took? Oh, this one. So this is the entry I took, but um, the entries I had planned were a test of this level here as my safe entry. So I did a plan the previous day to take this trade, and instead of waiting for my trade to show up, I took this trade instead, which was at the same level but not the confirms I was waiting for. I wanted a break and retest, which we got. Can see break, kind of little bit of a, see that little kind of double bottom form right there, kind of a little order block or liquidity generating, went up again. We in this kind of bearish structure here, and then could have entered after we broke this minor order block as like a riskier entry. Could have entered when I realized that we were forming a bearish structure here, and then we rejected. Could have entered there. Could have entered after we came back down to the bottom of this order block here, and then this first candle broke. Could have entered. So multiple entries, and that's what I'm realizing is these good trades have multiple entries, and then I wouldn't even have time to secure profits because price ran straight to target. That's something I have to start doing, is setting my TP exactly when I set my stop loss. Just set my TP one time in case moves like this happen, because moves like this do happen on gold quite more frequently than they do on pairs like GJ, which I used to trade, and this is just the 1 minute. So my whole target ran within like almost just this 1 minute candle, almost did the whole move. So that's one thing. Set TPs. That would have helped me a couple weeks ago too, when I took a nice impulse, like I took a break and then price ran to target, but I didn't have a TP, so, and I didn't have time to close manually, and then I just kind of held it. Like, yeah, it was just kind of stupid to end up coming out of it break even. And then this was also an entry I had planned, which was a pullback all the way to bearish structure, minor little order block formed, and then a break from it. Same kind of vibe, just order block form, break, and then enter. I even did 2 confirmations here, which was pullback to structure, we failed to break, that's 1 confirmation. Break of order block, that's 2 confirmations. Boom. Then you see this little candle go bullish here, and then a candle go bearish. So that's kind of like a little retest of that key level, and then could have entered there, could have entered there. Oops. So again, could have entered here, could have entered here, could have even entered when we saw these low highs form here, entered, when we broke these lows here, probably something like that. A little bit of a risky entry, just slightly better entry, and then stops now could have been somewhere above here. If it entered like there, stops could have been above there, and then taking it down to watch it break and then take it down to the next key level. That would have been a really good trade, yeah. Summary. So I believe I was risking. I believe I got my. I believe I went just a bit over my risk. I was risking like $6.27, and I ended up losing $6.48. So still good risk. I think I just got slipped a little bit somewhere or something like that. I don't know. But anyway, what I didn't do that day is wait for my confirms. So that's what I need to start doing a lot more of. What I did today actually, but we'll get to that trade in a second. Let me see, did I skip over any lessons? No, I didn't. Okay, cool. Yeah, so wait for confirms. I did wait for my entries, did for my entry area, but didn't wait for confirms. Did use risk management, did follow my compound plan and my trading plan. So my only mistake was not waiting for confirmations. But again, long-term perspective, because we preserve capital. Bang bang. Okay, so next trade, what did I do here? Right, and this is basically the same trade I took, the stupid trade I took up here, where price broke the key level just a little bit and I entered a sell. Well, this is me doing the same thing down here but with buys. This is the 15 minute chart because I wanted to show like the whole picture. But when I zoomed in on the 1 minute, basically the price just broke this level a little bit and I was like, ooh, enter. This was on this previous 15-minute candle here. I was on that candle here, and then you can see price close below and then took me out, and on the next candle took me out, but yeah, I got stopped out on a new 15-minute candle. Price did end up moving up though, so all I had to do was wait for the confirms again, waiting for confirms. Funny how I made that same mistake 2 days in a row. You can see this is another trade. This is the second trade in that same area, so I was looking to re-enter because I figured, okay, I probably just got stopped out, like I entered like a little too early, and let me give the trade a second chance. So I saw we came down, retested this area here, and then we were heading back up. I was actually still on the 15-minute chart when I entered this trade. So I saw basically what I saw was price from a lower wick and was going up past the key level, so I entered. On the lower time frames here though, you can see that we have these candles here closing very weak, and then this next candle went pow, impulsive down to the key level, go up and then down again, ended up closing 75% up here, close the rest here. Better entries would have probably been, again, if my buyers were buys, saw this little order block forming, look for entries somewhere at the bottom, or when it broke, or when it did the retest and then broke, and then stops could have been, if I took here, stops would have been below the structure. If I took here, stops would have been somewhere down here or below here. But yeah, this trade, so on the first position I lost this, second position I lost this, so I went over. I actually went this second position I should not have taken. Pretty much was just an impulse re-entry at full risk. If anything, I should have cut my risk at least to down to a 0.01, which would have still been a little too much, but I didn't let it hit me at full stops. So here's how I should have executed the setup. Again, the break and the retest, and let's see if I didn't close the full position there. If I didn't close this full position here like I did, could have actually gotten a few pips, you know, like if this is 15-20 pips here, this is 15-20 pips here, so from here, well, actually the place I entered above here, so above here, so here is about probably 10. Let me see, this is like what area is this? So this is 1841. What's that, like 1842? So probably like 10-15 pips from my area. Yeah, 1841.9, so yeah, 1842, somewhere around here probably, and then I would have been able to take, so that's why I could have taken that trade. And then this is my summary, but this is what I this is what I had lost for the day already, over my high limit, so I exceeded my max loss. I was pretty bummed, and I was planning to not trade. That was Tuesday. I was planning to not trade Wednesday or Thursday today. But then I was like, okay, I still have half of tomorrow's. I basically had used up that day's risk and half of the next day's risk. So I was like, let me just take the other half of the risk and trade in New York session, and then that'll be it for the week. If I win, I win. If I lose, I lose. So I came back. New York session. Took this first trade here. You can see I'm starting to be more patient and identify those setups. Order block formed, could have entered at the break of the order block, set stops, I don't know, 10-15 pips, wherever that would have been. This was 1852, so if I entered at 1852, then 10 pips would have been at 1853, day, so yeah, probably 10 or 15 pips. Somewhere in this area basically would have been my stop if I'd entered right here. Or if my bias was actually sells, then I don't even remember if I had a plan that day, if I had a bias, or if I was just looking at the chart trying to figure out what's going on. If my bias was sells, then I could have seen these multiple failures to break. I could have seen this starting to come down, although this would have been a bit concerning if I was expecting it to drop from this area and then it went back up, but it still failed to break. So then we had a bearish candle form as a bearish engulfing candle of the previous. It engulfed the previous candle. See, it engulfed the previous candle. Could have entered there, stops above or at the key level, and then just held that trade. Did the trade, I entered it right there, got out at 22 pips. So from up here to down there would have been like 40 pips at least. 40 something pips. Got out, price played around a little bit, but this was a good trade. Then basically what I figured was price broke, probably doing a pullback to continue down, doing another pullback, and so on and so forth. So I saw it do this pullback, and I was like, okay, this is like a little bit of a minor order block. Wasn't really that strong. Entered on the break, came back above. I only had a 10 pip stop. Could have had like a 15 pip stop, but 10 pip stop. Came up, took me out. Actually, no, I closed it manually myself when I saw this candle, but it would have taken me out on the next candle. It would have taken me out on this next candle's wick, so that's why I got out. Less than 10 pips loss, so 16 pips almost. Sorry, not 16 pips, but 8 pips, close to my stop, but not quite there. Anyway, took another trade actually. Price. Again, price was forming this minor order block here. This is where, so this candle is where I entered the previous one. Would have gotten stopped out on this candle, unless I had a 15 pip stop on this previous trade. If I had a 15 pip stop, I could have just held it and then closed it down here or down there. But I re-entered there. Price did this kind of minor order block thing. Came up. Noticed that the bearish structure was being respected. Well, minor bearish structure, and then it broke down again. Saw it failed to break these kind of lows here that coincide with these lows, and so I just exited. And it was a good thing I did, because price came right back to my entry, and I think it just went bullish because we were kind of at this bullish structure. The whole day, previous day had been bullish. But I was taking sells because down, just taking those corrective sells down to the structure. So yeah, came out, ended up coming out that day, instead of a minus $8 loss, came out with minus $4 something cents. So I almost $9. So came out with $4 and something cents, 37 cents. So that's within my risk. Took myself from negative 7% to negative 3.5%. So I'm within my daily risk. Oops. Next day, Wednesday, I saw a bit of price exhaustion right there. Bit of price exhaustion right there. Saw price coming up respecting this area. Minor order block formed, and I actually took it after this little pullback, this rejection wick. Couple candles closed, and then I entered. Then I saw price break the key level, and I thought it was going down, but then it came back up above. I did close 50% right here, and then I got taken out here. Re-entered once it started going back down, and no, I didn't. Really? Did I? No, I didn't. I didn't. I think I was risking my full risk, so that's why I didn't re-enter on another trade. Here we have how I could have taken this trade. If I had zoomed out, I would have noticed that this double bottom, and here is that setup I said that I identified again. Go back. There we go. See? Boom, bottom at the key level came up, then this thing, boom, then this thing, boom, bottom again, and then move up. Same thing down here. Same thing. Boom, bottom came up, inch a little bit. Boom, bottom, and then it busted up. So how I could have played this was this bull structure was drawn incorrectly. It should have been drawn at the bottom here. And when you look left, you can see that it lines up with those 2 points down there too. But could have taken an entry here with stops below here. Could have identified this order block there and then taken entries once this candle broke. Taking an entry. You can see my actual entry was here. I think I went into like 20 pips profit or 15 pips profit at some point, and then I closed it when it got here because this candle didn't move that fast. And here's how I could have taken it. Yep, identified that bullish structure, identified this as a minor order block, look for entries at the bottom of the order block, entered, held till next key level, and boom, trade would have been done quick. Here we have the summary of that day. So not bad because I managed risk, followed my trade plan, followed the compound plan, followed my risk management, waited for entries, waited for confirmations, didn't zoom out enough, didn't trade with the trend, and that's talking about this trade. So check it, I followed my compound plan, followed my trade plan, waited for entry, which was pull back up here, failed to break, and an impulsive candle. So then I entered. That was a good patient, that was a good entry. If the market was really bearish, which I thought it was, well, I thought it was bullish, but I thought that from where it was and the minor structure it was forming, that it would hold. Thought it was changing, especially seeing an additional test of the bearish structure many times and failing to break even here. And then the next candle did it again with the wick it had, and then it just continued moving up. Probabilities is what you got to deal with. Today I was disciplined and patient, but my analysis was wrong. Yep, it's gonna happen sometimes. No biggie. I'm not perfect and I'm still learning. Yep. Intraday bullish structure wasn't actually broken. Double bottom formed. Could be able to so basically I'm saying I'm gonna note it and learn from my mistakes by being better in future trades. Lesson: adjust trends to accommodate new information, and remember to to be more zoomed out. So basically this is just a test to the fact that when you come back to the charts after a day or so, do your analysis again or double check your analysis again by moving your areas of interest, your stops, your supports and resistance, your trend lines. Just move that again. And the trade of the week, which was today, just took one trade today. First trade was a good trade. Here we go. Price was in an uptrend. Minor order block. Impulsive break from the order block, which I couldn't have anticipated or broke or caught. It was a big break right above the key level. Did a small retest, and then as I saw price coming down here and then failing to break back below, especially as we was in an uptrend, that was my good sign to enter. Actually closed 40% here. This was 20 pips. Closed another 40% here at 15 pips because I thought this candle was going to continue going down and it would end up being a failure to this move here would end up being a failure to break these highs. That's what I anticipated, but I didn't wait for this candle to close, and I would have seen that it was very weak as a bearish candle, and the next candle continued moving up. So did the other one after that. Formed a small area here, but this was above the previous highs, so I would have been comfortable holding through that. Then the next area I would have probably tried to close at is probably around here. So I would have closed the next 40% at 30 pips instead. Then I would have closed my final runner up here if I had played it like that. But how I played it was pretty good. I took my entries at a good area, was patient in waiting for this to break up, and then taking the entries. Yeah, I secured partial, set it break even. This was a very good trade. Very good trade, and this is a reflection. Today was a reflection of how I want my trading days to be, because it was just very controlled, patient, took my entries, was in and out. In future, I just want to be able to manage it better by scaling out appropriately to allow me to maximize my profit and trusting that price will go to the next key level, because it has been. They've been heavily respected. So yeah, I pretty much followed all my rules today, followed all my plans, followed every good habit I had. Yeah, and like I said, today is a reflection of how I would like my average trading day to be: patient, planned, confident, proper risk to reward, no complaints. And here are my weekly stats. So again, this week, though I was risking 5% per day, I came out with 5% down for the week. It's pretty good. No big loss. If it wasn't for today, I would have been higher loss. But yeah, I took less positions again this week. Took 9 positions instead of 13 from last week, and instead of 15 from the week before. 9% today. Max loss was 5.17%. Lowest loss 3.68. RR not the best, still working on this. Win rate not the best, still working on this. But notice how my win rates and my RR are lower overall for the week, but I still lost about the same percentage from last week because of the trade that got the good RR today. Now, if all my winners had good risk to reward in that way, then that would be the best scenario. The losses would get offset because again the losses are kept small. Compound snapshot for today. These are the goals I am focused on. These are my first 2 short-term goals, which I'm going for. I'm pretty much $1,000 and then $10,000. This shows that I'm gonna reach 2,000 by the end of January. 1,000 January 15th. Not bad. I believe I can do it if I keep up my trajectory, keep learning from my mistakes, keep getting those good risk to rewards, keep being patient and entering the trades at the right time, and then having the confidence to let the trades run, then I can definitely do it. Next, my 10k goal, well, kind of a halfway point, 5k mid March somewhere. Then my 10k goal, April 17th, so like mid-April, about a month after I hit my 5k goal. 5k goal about a month after I hit my 1k goal. So after I hit 1k within 2 months, I should be able to get up to 10k, which is not unreasonable. Within 2 months, so definitely we'll be looking to do that and see how best I can do. Just trying to do the best. Anyway, good week in the market so far. December is basically losses each week of about 5% each, which is not bad at all. Not bad at all for 5% loss for a week when I'm risking 5% per day. That's because my RR isn't that great currently. My win rate isn't that great. Long as I can get up to that 50% win rate, long as I can get up to that 1 to 2 RR minimum, like minimum, anything better than 1 to 1. My goal is 1 to 3. I've caught 1 to 4 before. Today I caught a 1 to 2. In terms of pips, it was like a 1 to 3. In terms of profit, it was 1 to 2 today. So, long as I can keep that up, keep going with that, I'm sure I can make it to my goals. So, March, April gonna be exciting months for me next year when I can hit these milestones and make some power moves that I've needed to make for a while. Make some investments in myself for my future, etc. So, that's that.